So there are many online strategies for Forex, mostly for scalping trade, and there are many day trading strategies as well, swing strategies, if that's the type of trader that you are. But there's one strategy that I consider to be the easiest, like moving average strategy that you can use for Forex trades. It's actually the one that I constantly use for my day trading activities. So in this specific video, I want to show it to you. Hi everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. In today's video, we're going to talk about the best moving average Forex strategy. And if you're new into my channel and you're into binary options, Forex trading, crypto trading, or any type of making money online, this channel is for you. I do a lot of software reviews, broker reviews, and just like this one, I give you tips and strategies as to how to make money with online trading. So if you're new here, consider subscribing. With that being said, let's jump into the video. Okay, I want to start this video by telling you that many times I actually tell you to focus more on the actual percentage increase in your account instead of looking at the pips and looking at the accuracy of the trading of the signal or the trading prediction. But truthfully, with this strategy, I focus a lot more when it comes to accuracy. And I'm going to explain this, of course, in this specific tutorial. But more importantly, I focus on a 60 to 70% accuracy in these signals. So basically, when you're actually looking forward or you're looking towards making 1.1 risk ratio, which I'm going to explain in this specific tutorial as well. Also, you need to focus on a 1.3 or 3.0 win ratio or risk ratio that like I said, risk reward that I'm going to teach you right now. How is it that I measure it? And I'm going to go ahead and show you why this is such a powerful strategy when done properly. So that being without further ado, let's go ahead and jump into it. So the first thing that you guys have to add is 3 moving averages, okay? I actually have them added right here, but I'm going to show you exactly how you're supposed to do it. So you click on indicators. I'm on MT4, on TradingView right now. This can be done on MT4 and MT5 as well, but I do recommend you to use TradingView. It's 100% free, so definitely you can go ahead and use it. I'm not affiliated with them at any point during this video, but I personally, this is the platform that I use, so definitely highly recommend it. So you are going to add this moving average, okay? You're gonna set it up later on, so you're gonna add 3 of them, and then they're gonna appear in this area right here. So I actually have them unshowed right here, but I'm gonna show them right now. And I'm gonna explain you one by one. So the first one is gonna be I recommend you to put it in blue color so that you can follow with all my tutorials. Then I also suggest you that you actually put it in a little bit thicker, style so that you can actually see it when it's going on. And then the inputs is actually a period of 6, okay? This is the period of the candlesticks, period of 6. This is a simple moving average, is not exponential moving average. So we hit okay and everything good to go. The second one is going to be with a period of 14, okay? The yellow color and also the thickness, I'm going to actually leave it as it is. In fact, this one, I'm actually going to make it a little bit thinner. There you go. Perfect. And the last one is with a period of 50, and this one I will leave it thicker. And this could be red, this could be anything that you want except for white, of course, if you look at if you're using at the white background. And then this is a 50 moving average. So we hit okay, and this is what it should look like. Now, what is it that we are actually looking at? I'm looking to add a crossover between the 6th moving average and the 14 moving average, which means the blue and the yellow. And what you can do is simply wait for their crossovers. This red line in this specific scenario, since we're talking about Forex, will determine the trend of the pair. So that means that you have a higher possibility to actually win a sell position when there's a downtrend, and you have a lot more chances to win a buy position when there's an uptrend, okay? So how is it that we're measuring? Let me go ahead and get my pen real quick in here so that I can show you. In this specific area, as you can see, the 50 moving average is above. When the 50 moving average is above, that means above the candlesticks, above these candlesticks right here, this is a downtrend. Okay, this is considered a downtrend. And when the opposite happens, and you actually see, let me see if I find an uptrend. We're gonna use this as an example. Take a look. It's below the candlesticks. This means this is an uptrend. Okay, you can find stronger downtrends and uptrends and so on. I'm actually looking at the live charts right now, and that's the reason why you can actually see it. So what is it that we look for in order to enter a position? Very simple. We only need to look at the crossover, like this one right here, of the blue moving average towards the yellow moving average. Now, since we're looking at a downtrend, you're gonna enter for a sell position, okay? So this blue moving average keeps on moving around, but if you notice, it crossed 1, 2, 3 times it actually crossed while it was a downtrend. So you have 3 entry opportunities. If you miss the first one, of course, then you can actually enter the second one. Like I mentioned, this is the easiest moving average strategy. I do have a little bit more tips in this specific strategy when you're a little bit more advanced, but right now we're gonna focus on the basic, and in the future video, I'll go ahead and talk about how you can actually take advantage of these change on trends, okay? So let's go ahead and dive into it. So the way you're supposed to enter this position, since this is a short position, right? We're gonna enter the short position right. Let me go ahead and get the entry point right now. So this is where you see that this candle is about to touch and cross over, right? You don't enter in this one, okay? You need to enter on this one right here. Why? Because it already crossed. There are some times when you think that the price is going to cross, but it doesn't, and instead it retracts and it starts jumping. So we don't want to risk our trades in that, so you enter it once the position already crossed, once the moving average already crossed. So what you're going to do is that you're going to enter a short position at the moment that this candle actually opens. So it will be right here, right? So this short position, this is the beauty of this specific trading strategy. So like I said, this is 70% of the times is actually right. It's not 100%, but this is how we should take advantage of it. So if you notice, there is a slight support line in this area right here. So you can actually set the take profit, the stop loss at like around that area, okay? Like around that area should be good. And the take profit should be at least 1 or above 1 and win ratio. This is the risk reward that I'm telling you. As you can see in this area right here, it says risk reward. It says risk reward ratio, right? Which right now it says 1.55, which means that it's 1.55 times what your stop loss is. What I mean by this is that if you lose the position, you're actually losing more than you could win. So when you actually increase the take profit, if you notice the risk ratio, the risk reward is actually growing, right? So if I actually set it for 4.0, like right here, it means that I'm actually looking forward to make 4 times more money than what I'm actually willing to lose. And this is the beauty of this specific strategy. Now, I do recommend you that you actually set it for, let's say, around 1.5 win ratio, around that area at the moment that you actually enter the position. Now, that doesn't necessarily mean that that's going to be your win ratio, okay? But one thing that I usually do is that I actually set a fast profit, like in this one right here is 29 pips. But when I actually see that the price starts to move towards my direction, like right here, or even I let it go like a little bit because it jumped a little bit, it almost touched the stop loss. But when I see it's actually getting to this level, usually what I do is that I actually move my take profit a little bit below, and I move my stop loss to the entry point so that I can actually have a risk-free trade, okay? So you have to keep on moving and playing around with the actual trade. Now, what happens if it goes in the opposite direction, right? If it goes in the opposite direction and it hits the stop loss, then boom, you lose the trade. But let's go ahead and see how many times we can actually have this trade as a win. I'm looking at a 1 hour candlesticks. So let's say, for example, that by any chance you decided that you were gonna have this as your take profit level. So that means that you won the first one, right? So you have so far, this one was a win of 50.5 pips, right? Sorry for my writing. So then you actually move the entry point. I'm not gonna move it though. I'm gonna choose another one. So this is another short position in this area. As you can see, it crossed again. We don't enter this one. Why? Because it's an uptrend, right? It's a downtrend, I'm sorry. So we're gonna enter only for the sell position. So if you notice in this area, this is the entry point. Why? Because this is when this candle was actually opened. Here's another tip, okay? Find a resistance level to see your stop loss, all right? Because that could be the level that could be reached. Now, obviously, since we're looking at a downtrend, we're not looking at strong support and resistance levels, but you can actually look, for instance, the take profit level of the previous trade. As you can see, it was a support line that was broken, so now it became a resistance level. So what you can do is actually go over here and put your take profit. Now, your take profit, it should be at least 1.5 and above, right? So you can actually set it for 1.5 right here. 1.5 is exactly what it is. And if you notice, it didn't even go all the way to the stop loss level. It just started dropping. It had a couple of hours on the stop loss area, but then it started jumping, it started dropping, and boom, it hit all the way over here. Now, assuming that you actually allowed this trade to close in the take profit level, it closed in this area with 36 pips in profit, right? So this one was 50, this one was 36, right? So now we actually are looking for a third entry position. So what's the third entry position? Could be this one right here, right? Not this one, but this one right here. Boom, you enter, and here you can actually set again the take profit. If you notice, this is a clear resistance level, so you set it up a little bit above, not exactly at the resistance level, because it's a little bit more likely that it's going to be touched. So it's actually better to set it up for a little bit above, so that even if it reaches this resistance level, it retracts and it doesn't hit your stop loss level, right? So what you're going to do right here, let me just go ahead and make it a little bit smaller. There you go. So this is the entry point around where this candle actually started, right here. Boom. So this is the stop loss. So we're gonna look for 1.5 win ratio, which is around right here. So as you can see, this one was also hit as the take profit, and we have a 35 pips. Am I right? 37 pips. 37 pips. So how much is that in total? 50 times 36, that's 86 pips in profit. 86 plus 37, that's 123 pips that we can actually make in profit. Now, one thing that I definitely recommend you is not just focus on the pips itself. Why? Because yeah, the pips are good, but how much money are you actually making? How much money are you actually risking? And right now we're gonna do an example on a buy position as well, so that you can see the power of this specific strategy. So what is it that you need to do? First, you need to make sure that this stop loss level that you're actually touching is no more than 2% of your balance, okay? No more than 2%. Assuming that is gonna be a 2% of a balance, that means that for the win rate, if it's 1.5, it should be 3% or more, right? So if you win 3% on one, 3% on the other one, and 3% on the last one, that's 9% increase in your account. If by any chance you lose one of the three, then that's a 7% increase in your account. If you lose two positions and you win one, that means that you're gonna lose 4% of your balance, and you wanna win 3% of your balance. So at the end of the day, we're looking at a 1% loss in my trading session, which shouldn't be that bad, okay? But it usually doesn't happen. You usually get a lot more wins than losses. So right now, let's go ahead and delete this, and we're gonna look for a buy or an uptrend scenario. Take a look at this one right here. It looks pretty damn good. And in this specific area, we are going to see a retraction in this area right here. There is a retraction, and do you know why that happened? It was because this is an uptrend, so usually the crossovers going down are not being respected. So this one that maybe someone would think, hey, might be a sell opportunity, it's not. It's actually a buy opportunity because it will retract. It's an uptrend. Now again, it's not 100% of the times, and right now I'm about to show you where, but let's go ahead and start with a long position right here, and I would say it's in this area, okay? Because this is where I actually saw the retraction, not on this one, but on this one right here. And let me just go ahead and change the colors of this. Okay, now it looks better. And this is what we're gonna do, exactly the same thing, right? We need to actually get to the entry point, which is this one right here. And we're gonna set the stop loss to the lowest support line, which I would say is this one right here. So I'm gonna put it a little bit below the actual support line so that it doesn't hit immediately my take profit, my stop loss, I'm sorry. And I'm gonna look for 1.5 win ratio. We're just assuming that we're not gonna move the take profit to different levels later on. So if you notice this one right here, the take profit was actually hit in this area right here. And on this one, I would play around because at the end of the day, I actually see that in this specific area, if you notice, there was another crossover. So that was actually another indication that it will continue to go up. But we're gonna assume that we only place one position. We don't wanna seem like we're kind of like forcing the position or anything like that. So this one right here, this is another one, another retraction. So this is the entry point. You look for a new resistance level, which I would say is this one right here, pretty much. So I will leave it in there. And I'm gonna look for 1.5 win ratio, which would be around here. So take a look at it. We have a win ratio of 1.5 in one position and the other one in one position. And this one didn't even went down at any moment. So on this area right here, on this position, we actually wanted 2 candles after. So we're looking at this one was in win 41 pips. Let me see. 41 pips, and on this one we're looking at 41 pips as well. 41 pips. So we're looking at 82 pips in profit. But is that the most important thing? No, right? What's the most important thing? The most important thing is the actual win ratio towards the loss. So we're looking at, again, a 3% increase in one trade and 3% increase on the other one. So we're looking at a total increase of 6% of our balance. But hey, Chris, the next trade actually didn't look good. Well, truthfully is that you're not gonna enter a position when the line is crossing down. You just wait for the retraction to see if you can enter, if it's going to continue going up. But if you notice in this one right here, it could be like, you might think, hey, maybe it retracts and I'm able to enter again. But the truth is that it did not end down and it started to become a downtrend. And take a look, more entry opportunities below. So again, it's not 100%. And I'm going to show you, just before we finish with this video, I'm going to show you one position where you could actually end up losing money. So let's say this one right here, it looks like it's going to be a short position right here, right? So you enter the position and we're going to enter the stop loss like around this area, and you're going to enter for a 1.5. Actually, it was a win indeed. Yeah, it was a win. Let me look for one that you could actually lost. Yeah, this one looks kind of crazy. Okay, let's see this one right here. Let's assume that you actually saw the actual crossover and you thought, okay, there's gonna be a retraction, so it's gonna continue the downtrend. And you thought, okay, this is the next resistance level, so I'm gonna set it up. And this one right here is the actual take profit, 1.5 win ratio. And guess what? Instead of actually going down, it started to jump. So therefore, we actually lose these positions, okay? It does happen, okay? It does happen, but how many times do you actually see it happen? And I'm not actually rewinding my video just to find the areas where the trades actually were wins or anything like that. No, I'm actually just looking at the real moment, the moment that this is happening right now. So therefore, I can tell you, yes, this is how the strategy has been behaving within the last probably 1 or 2 weeks, right? So make sure that when you actually testing this strategy, make sure that you use demo first. And second of all, make sure that you use a 1.5 or above a risk reward. And once you actually start dominating the strategy, then you can start, you know, like playing around with the take profit and the stop levels, as I mentioned. Once you actually see that the price starts to go in the right direction, it's in the midway or something like that, then you can reduce the stop loss to the entry point so that you have a risk-free trade. I don't usually do that all the time because I like to, because if it retracts, then it hits the stop loss and I don't make any money, but then it keeps on jumping and I just miss my opportunity. But I actually keep an eye on it, and in order to increase the take profit and also the stop loss level. But in the meantime, start practicing with this specific like scenario that I just gave you, and I'm sure you're gonna get some cool results. Thank you very much for watching this video, and if you guys have any questions, you can put them in the comment section below. I'd be glad to answer those comments as soon as I can. And thank you for watching this video. Don't forget to subscribe and smash the like button if you found value on it, and I'll see you on the next one.